Let's talk about the gold forecast, the gold price and inflation. And we will look at fundamental factors, but also then look at a technical picture and a concrete price forecast of gold. Let's start now with the fundamentals. Here I put some charts from the In Gold We Trust report of the 2022 edition and the 21 edition. And this is really a highly important research document from real gold experts. Here on this first chart, you can see that the gold price is heavily influenced by real interest rates, meaning when real interest rates are negative or very low, this is generally very positive for the gold price. And here you see a history from 1970s to 2020. And when US interest rates, real interest rates are positive, this is generally acting as a dampener on the gold price. So again, what are real interest rates? If you have the nominal interest rate of, for example, 3% and you deduct inflation of, let's say, 8%, then you end up with a negative real interest rate of -5%. And negative real interest rates are generally positive for the gold price. This is a first very important observation based on the data. Then we look here, okay, what are the real interest rates right now? And we see that real interest rates are heavily negative right now because inflation is just out of control. And that is generally another positive factor that we see here right now. Then inflation, we have here the inflation CPI numbers in the bars, and you see that it's shot up to 8%. So generally speaking, in 2018, it was more like around 2-3%. Now it's heavily up at 8%. This is also, generally speaking, a positive factor that we see right here. And not only that, if we look at true inflation numbers, measured a little bit different than the official government numbers, because they are kind of, let's say, manipulated and not reflecting the true price increases, then you see here the true inflation numbers are maybe more like 10 or 11%, so double digits. And that is really crazy if you think about it. Then we also have the debt levels. You know, the debt levels are ever increasing, and this requires that the interest rates stay low. So the government, they cannot finance themselves. And also a lot of firms, zombie firms, they cannot finance themselves at higher interest rates. So this naturally means that there's, I think, a good likelihood that interest rates cannot rise and will stay low for a while. And this is again a positive thing for the gold price. If you like this video, please like the video, subscribe, and also activate the notifications. And also let me know in the comments if you own gold currently or if you plan to buy gold in the future. Then I will give to you the common sense argument, what I believe because it's true. Because gold, you can think about it as an anti-fiat paper currency. So it's the opposite of paper currencies because gold is real money. It's a real store of value. And if we have high debt in the economy, bad demographics, weak economies, this will ultimately lead to more money printing. We've seen this time and time again. And more money printing, on the other hand, leads to more inflation. And this will push the gold price higher. And this is for me the common sense argument. And looking at the past proves that point, because if you have here in the top graph the US dollar purchasing power, and it has been declining steadily for a long period of time, and the reason is because of money printing. So no, they will never stop money printing. It ebbs and flows, of course, you know what I mean? But on a long-term trend, the money printing is there, and the erosion of the value of fiat paper currencies will happen. And you see the reflection in the gold price, because if the fiat currency gets debased, then gold measured in US dollars in the fiat currency itself will automatically go up. And this means just that gold is a store of value. It will protect your purchasing power. But if you're betting on gold price increases, this is of course a positive factor, because just like how the system is designed, this will contribute to a rising gold price in US dollars, you understand? If you liked how I analyzed gold from a fundamental perspective, a technical perspective, how to come up with an investment thesis, and generally how to become a better investor, then please check out my free investing video course. Just click a link below the video in the description. And also, if we look at intermarket analysis, here's the ratio in the gold price divided by the price of the S&P 500 stock market from 1900 to 2020. And you see that the average lies around 1.67, and gold versus stocks has been much higher priced, let's say in the 80s or in the 30s, 40s. And right now we are at record low valuation levels of how much gold price you have versus the stock price, you know what I mean? So this is another factor that indicates potential of a nice gold price increase. And now, so much for the fundamental factors. We go now into the technical stuff and a concrete gold price forecast and a gold forecast. So let's look at that. So here you can see the gold price on a 3-month chart, meaning each candlestick represents a 3-month time frame. And we see that gold is in an uptrend, because here from 2000 on to 2022, we see gold price has steadily been increasing. Of course, we had a big drop here in 2015 from 2011, but now in 2022, the gold price shot up heavily. And what we can see here is not only that gold is respecting this uptrend line, which is positive for the gold price, but also that we see a cup and handle pattern. And in technical analysis, you can project some potential price targets by taking the lower price and going to the upper price of the big cup. And then you project a 1-to-1 measured move of those 82% to the upside. And then this brings you to a price target of $3,500 of 1 ounce of gold. So this is a big increase of, let's say, measured from the current price. This is actually an increase of 100%. So a doubling in the gold price. Always, if you plan out something like this, you must know that a real breakout is only confirmed if price really holds above this level. You know, then you have a confirmed cup and handle. Otherwise, it's just a potential cup and handle. And you see that currently also we are between 2 zones: a resistance zone at 2050, and we have a support zone of 1600 or 70, call it 1700, okay? And here you see the gold price fluctuates currently. So the gold price consolidates currently, and now we wait for a upside breakout. This would confirm our thesis of a doubling in the gold price. Or we could also see a breach of the trend line, and a next support level would come here at 1300. So this could be an alternative scenario. You need to be always prepared as an investor that your thesis is not playing out and price goes against you. But what does it mean from a risk reward perspective? It means that the gold price maybe can drop 20%. So this would be our risk if the thesis does not play out, and it takes a little bit longer to play out. But still, even if the gold price would drop, I would still expect that from there the gold price would still go to the target because of all the fundamental factors we covered, you know what I mean? So overall, if you look at the risk reward, the reward is 100%. The risk is maybe 25%. So this is basically even better than 4-to-1 risk reward ratio. So from my point of view, this all supports a higher gold price and an investment in gold. And this is pretty much what I think and my gold forecast, that we see a higher gold price, substantially higher gold price because of all of the factors, because of this technical analysis. And of course, always remember, things can play out a little bit differently, especially in a shorter period of time, let's say 6 months, 12 months, but in 3 years, 5 years, 10 years, you know what I mean? The probability of success of a higher gold price, in my opinion, is definitely there. I hope this video was helpful to you, and until next time. See you.